which is looking for a good place to be invested in. Because of what is happening in Europe, I feel that more of that money would like to make a home in India and such markets.
A few of the headlines in before the bells ring here on Wall Street. Futures are pointing still to a lower open, although marginally so. Japan reported signs of slowing growth, adding to concerns about the global recovery. Japan now the third biggest economy in the world after China. Bank of America, meantime, considering the sale of part of its stake in BlackRock as part of its efforts to fit new financial regulations. And General Motors is set to submit its registration to return to public ownership today or tomorrow, Simon.
Okay, as we count you down to those opening bells, let's bring in Peter Kenny, Managing Director of Knight Equities. Peter, what strategy are you guys employing?
Well, today we see that the markets are fairly flat in terms of the futures. I expect we may see some sort of an early morning bounce. We were down for the last 5 trading sessions, but I do think any bounce we get today will probably be short-lived, as flows are still moving out of equities and into bonds at a fairly significant pace, up to $185 billion over the first 7 months of this year. I don't see that trend stopping anytime soon, but valuations are going to bring in some value players nibbling around the edges, so that's why we may see some stabilization today.
Good to talk to you, Peter. Thank you very much for that. Peter Kenny, Managing Director of Knight Equities.
And we've got the bells going to ring in about 1 second. There we go. Poly One, ticker POL, maker of Polymer Materials. We were talking about it. Plastic, celebrating its 10th anniversary. Listed here at the big board. The CEO is going to be with us in a couple of minutes. As we said, stock's up nearly 80% over the past year. At the NASDAQ, Newport Corporation, ticker NEWP, maker of lasers and precision technologies for scientific research, aerospace, and microelectronics.
Okay, our market reporters are standing by as we kick you off with another session and another week. We start with Scott Wagner on the floor. Good morning, Scott.
Good morning to you, Simon. Modestly lower open this morning. Dow Jones Industrial Average just getting underway here, down 30 points or so. Slower growth in Japan. That's weighing on the major averages. Let's take a walk over here. Take a look at Lowe's. Lowe's trades at 6p. Obviously, the home improvement retailer was out with its numbers today. It cut its revenue outlook. Commentary on the street this morning could have been worse. The revenue forecast, as I said, was below expectations, yet the stock was higher this morning. Cisco, that's the food company, their sales were down slightly. The sales beat. I should say the shares were down slightly. Sales beat, earnings missed. Bank of America said to be considering reducing its 34% stake in BlackRock. Reportedly thinks it's no longer a core asset. Johnson Controls, JCI, that stock higher this morning. Barron's saying it could outperform significantly in the coming years. VMware, meantime, upgraded to buy from hold over at Think Equity. We'll take a quick walk over here where the crowd is dissipated, but nonetheless, it's worth 3-par trades. And on that note, I'm going to send it up to Matt Nesto because 3-par is involved with a deal, a company that trades up at the NASDAQ. Matt.
That's right, a little startup, let's say, Scotty, called Dell. Let's take a look at the markets here. The NASDAQ is officially down for 5 days in a row. We're 0.5% lower at the open. That's 12 points at 21.61. Scott mentioned the 3-par side of the trade. Dell's off about $1.7 billion, using up that cash offer. Just a little over $1 billion in cash, works out to $18 a share for 3-par. Tracking RIM here again. They're trying to solve their problems in terms of the government data constraint. In India, looks to be making some progress there, but the stock, like most technology, continues to be caught up in the swirl here today. Apple's a little bit weaker, down about 1%, in line with the market decline here today, and this after a mid-level manager was indicted over the weekend for basically taking bribes with Asian-based suppliers of Apple. Strayer is absolutely irate over the process that the Department of Education has chosen to use. You just heard Herb and David talking about it, but contrary to the normal process, they say they were not consulted or given any input on that, but the stock, as you can see, down 17%. They want their say immediately. Let's get down to Bertha, who deserves her say immediately as well.
Mark, we had oil holding in with the dollar being weaker, but right now with the Dow opening down nearly 100 points here, we have oil and energy pretty much following right along. One of the interesting things we're watching today is gold. We saw open interest increase in gold, according to George Ira over at RBC. Gold today hitting a 6-7 week high on that bad print on the economic data out of Japan. Ashraf Aladi also saying that we are entering the seasonal time when gold usually does best. And with lots of uncertainty this week, we're going to have Eurozone debt issuance. We'll see how that goes, Ireland and Portugal. And then on top of that, you've got quantitative easing coming from the Fed. All of that, he said, is bullish for gold here as we look towards the end of the year and uncertainty continues. Rick Santelli, over to you in Chicago.
Unbelievable day for treasuries. Okay, we are looking at 2.58 yield. You know, last week some firms marked down their objectives to 2.5% at some distant time down the 210 road. We could be there in a half hour considering the way rates have dropped just in the last couple of sessions. And something very fascinating. The tick data that was out today, remember, it's June. The categories that saw net buying, agencies and treasuries, net selling, stocks and corporates. This is June. So even the foreigners saw the quantitative easing light at the end of the road, because the two categories that improved are the categories that we see the buying occurring in, something to pay attention to. In 26 minutes, we'll have some housing data. Now let's go back to Aaron.
Thanks very much, Rick Santelli. So we're just a few minutes into trading. Dow's down 61, NASDAQ lower, S&P lower. Let's get the early tick. Tyler Vernon is with Biltmore Capital, calling for a volatile market. Jamie Cox, managing partner with Harris Financial Group, also with us. All right, I want to give each of you one question about where you're bullish. Jamie, let me start with you. You say your outlook for this year is very positive. We're living through a revolution. There's more to come. Make the optimistic case.
All right, Aaron, I think there's a productivity boom that we're witnessing as we start right now. We have wireless devices, iPads, we have iPhones, we have Droids, which are being sold at record numbers. I think we haven't yet seen the benefits of those devices and their uses in business. So I think that this productivity wave will continue to carry us through the remainder of the year and into the next.
All right, so there's, I guess, a big picture optimism of Simon. I know is going to ask you where you're investing. Let me get the question to you, Tyler. It looks like you're maybe not as optimistic, but you also see a big positive coming in tech.
Yeah, we think there's, you are right. You're pushing me to make an optimistic case, but if we're going to make one, it's going to be in tech, especially after today's pullback, last week's pullback. There's an unbelievable cycle going on. We saw that in the GDP numbers as far as upgrades that are going on. Companies just didn't go to Vista. They didn't accept it, and we're going to see a big push towards Windows 7. And we think we're in the third to fourth inning of tech, and that's going to be a tremendous leader as we continue to look forward throughout the remainder of the year.
And yet, Tyler, your broader view of the market is that we are going to go down maybe 10% before we get a floor.
Yeah, I think so. At this point, I think we're really stuck in a push-pull. Investors are seeing unbelievable valuations here in the market, and we're going to see a floor there as institutions step in. But there's really not a whole lot going on the top end, and we're going to see a cap there as investors continue to focus on negative economic reports, whether it's housing, consumer data, etc. And I think investors need to think a little bit different this time when it comes to strategy.
And briefly, what would that involve then?
Well, Biltmore Capital manages a covered call option strategy. If we can pick up 7 to 9% annually through premiums and another 2 to 3% dividends, I think our higher net worth investors will be very happy. So we're overlaying these type of alternative strategies in today's portfolio.
Jamie, you started the interview by talking about a revolution and that you were the more optimistic of the two. Actually, if I read down your notes, that says you said that there are two possible scenarios from here: a washout, where we clear